I was asked to do an update on Newmont, and the new numbers are frankly quite brutal. We're talking about 174% price performance over the last 12 months. We have record free cash flow and a gold price over $4,500. And yet, in 2026, production is expected to fall by 10%. This is exactly the phase where we need to differentiate. So let's just take a look at the whole thing, and as always, without the marketing glasses. The current figures, we currently have a price of around $122, a market cap of about $133 billion, a dividend yield of 0.8%, a PE ratio of just under 19. Now for what really counts, revenue of $22.7 billion, profit of $7.1 billion, and an operating profit of $11 billion. EBITDA of $13.5 billion. And now the most important part, we have $5.6 billion in cash and $5.6 billion in debt. That means effectively net almost debt-free. For a gold major of this size, that is extremely strong. And with cash flow, it becomes even clearer. $1.6 billion in free cash flow in Q3 alone, $4.5 billion after 9 months. Why is it performing so strongly? Quite simple. We have operating leverage here. Production costs are around $1,566 per ounce. Gold is being sold for over $4,500. The difference here is simply brutal. The industry is currently seeing margins that we haven't seen like this in years. On top of that, Ahafo North is now in production, share buybacks are underway, 55 consecutive years of dividends, and the balance sheet, it's clean. That's the reason why institutional money has flowed in here. And now we come to the critical point. In 2026, production is expected to fall to 4.0 to 4.2 million ounces. That's about 10% less. Why? Some mines are running out, others are being converted, and new areas have to ramp up first. Plus bushfires in Australia, which are weighing on Q1. That's operationally explainable, but less volume equals less leverage. And now comes a second point that many underestimate. The higher the gold price, the higher the royalties, profit sharing, and taxes. And that means a part of the operating leverage is given back. As long as gold stays high, no problem. If gold corrects significantly, margin pressure comes faster than many think. Now let's look at the valuation. Are we too expensive? The fair value is around $114. We're currently at $122, so slightly over fair value. Analyst targets average $135, some are much higher. Forward earnings are expected to continue to rise, meaning if gold stays at this level, the PE ratio will quickly normalize. But the stock is near its high. This is no longer a classic value entry. It's currently a momentum play. Nevada Gold Mines is a strategic lever. Barrick wants to spin off its North American assets. That includes Nevada Gold Mines. Newmont owns 38.5% of it. This clearly means Barrick can't do anything major without Newmont. And if Barrick wants to sell, Newmont has a right of first refusal. It's not a short-term price driver, but strategically it's power. And large mining companies get stronger long-term through such options. What is the current assessment? Newmont is currently very strong financially, cash flow driven, well run, with a top asset base. But production falls in 2026, the yield is low, the stock has run up, and it all depends on gold. To me, this isn't a stable dividend stock or a high yield title. It's a gold lever with a strong balance sheet. Those already in are holding a very high quality asset. New investors should wait for a pullback toward $110 to $115. If gold continues to climb, Newmont will keep generating massive cash. If gold prices fall, the stock will become much more volatile. So what's the bottom line? Newmont isn't a hype player. It's the world's largest gold producer with a very strong balance sheet. But gold price is king, and I'm curious, will gold stay above $4,000 or see $3,000 again? Write it in the comments and please let me know. If you're not a subscriber yet, I'd appreciate it if you'd subscribe here. Otherwise, if you enjoyed the video, I'd appreciate a like. Otherwise, I look forward to any exchange with you and the community, so please comment on what your current assessment is. There are many conflicts right now that could quickly catapult gold in one direction or another. As always, this video is not investment advice, just my personal strategy. I wish you all successful investing.